Hello and welcome to the preview for the Bank of England's May quarterly inflation report. So the report is due to be released at 10:30 AM London time on Wednesday. So just in terms of a bit of a background for the release, so in terms of the previous quarterly inflation report, we did see the Bank of England say that inflation could dip in the short term, but should reach that 2% inflation target in the medium term. And in terms of recent rhetoric from the Bank of England, it has been few and far between, given that we did have that blackout period in the run-up to the UK general election. So one of the main things that the markets really had to go off was the Bank of England minutes release, which we did see in April. So this was a more hawkish release than a lot of participants were expecting, with the report saying that fluctuations in sterling could filter through to inflation at a faster than initially expected rate. So this could be something to watch out for with this, to see if we do see a continuation of that expectations, which subsequently could filter through to the Bank of England's inflation forecast. Although in the short term inflation forecasts are relatively subdued, in the medium term we could see a pickup in those inflation forecasts. So subsequently, UK press has speculated that we could see Carney stress there is somewhat of a dysfunctionality between when the market is pricing in a rate hike and when the Bank of England is pricing in a rate hike. And as such, we could see Carney force participants to bring forward their expectations of rate lift-off by the Bank of England. So then, just in terms of a growth perspective, over in the UK we have seen a relatively disappointing start to the year. So first quarter growth at just 0.3%. So this could lead to a relatively downbeat element of the report from this perspective. However, some analysts have suggested the Bank of England could actually downplay this and blame it more towards business caution heading into the UK general election, and with potential growth in the UK to pick up in the second half of the year. And on the topic of that election, one thing just to bear in mind, although you not necessarily see it mentioned in the report, is we do now of course have a Conservative majority government. So just in terms of their approach to fiscal policy, they'll be implementing a much tighter fiscal policy than the Labour alternative. So as such, somewhere down the line this may need to be met with looser monetary policy by the Bank of England. So like I said, it may not necessarily be mentioned in the report, but there's one thing just to bear in mind for future rate expectations. And in terms of other things to look out for, of course, with the Bank of England, we'll be looking out for any comments on slack in the economy, which is of course a key metric used by the BOE. So just in terms of the overall market reaction then, should we see that quarterly inflation report following from the minutes we saw in April, we could see some strengthening of the sterling currency, as well as a bit of a bear steepening in the UK curve. However, if this doesn't necessarily follow on from the April minutes and the Bank of England are more wary on inflation on growth than potentially expected, then we could see some softness creep into the sterling currency, as well as a bit of bull flattening in the UK curve. And finally, just in terms of the way the report's released, at 10:30 AM London time we'll see a flurry of headlines from the reports hit the newswires, and thereafter we'll see it kind of like an ECB style press conference with Carney and some of the other MPC members. And finally, one thing to bear in mind is that given the Bank of England are so far away from that 2% inflation target, we'll also see an open letter written by Mark Carney to UK Chancellor George Osborne explaining how the Bank of England expects to get inflation back on track. So that's all for me, and thank you for watching.